This is home buying seminar. This is February 22nd, 22. How special, right? Again, I've introduced myself, Marla Dickenson and Deborah Hannon, and we will talk about the home buying process. You want to learn more about home buying? Well, you've come to the right place. Our goal is to help you realize that the dream of ownership, it's possible. It's absolutely possible if you position yourself and you put some skin in it. Where do you see yourself in 5 years? That's a question to ask yourself. Home ownership can absolutely breed wealth, and I'm certain that Marilyn can speak to that when she speaks with her client about gaining assets. The value of a home may grow, and you may acquire equity over time. Pros and cons of buying a home. There's no landlord. You own it, right? Sell your home at any time. It's your property. You can choose to do with it what you wish. Potentially, build equity that you may be able to use in the future for a number of different reasons. And I'm sure Deb will touch base on those as we go along. Mortgage interest payments may be tax deductible. Choose a home with features you want. You can look around and decide, what is it that I want to see in a home, right? Did you know?
Go ahead.
I'm going to introduce this slide. Deb's going to speak to this. Thank you.
I think that Linda will definitely agree with me that it's more important than ever to be prepared. It's a seller's market right now. For those of you that have been out there, I know that my son's been out there looking. It's definitely a high demand and a very low supply. So by you being here this evening just says how interested you are about being prepared. And I thank all of you because I know your schedules are very busy. Mm-hmm. One of the things you want to keep in mind is that your payment is not only the principal and the interest, but it also will include your property taxes as well as your homeowner's insurance. You take the yearly amounts of those divided by 12 and add those onto your monthly payments. So then they're paid through an escrow account of the lender, whomever you choose, and we hope you choose us, and they'll be paid through them when they're due each year. That way you don't have to come up with $4,500 on the Missouri side during Christmas. We at US Bank, for lack of a better word, have a plethora of different thing we can offer. We have all types of loans, and I wouldn't say no down the game, but we are going to cater to all options for all income types. If you're looking at a condo, for example, you're going to have to think that there's going to be a homeowners association due on top of what your payment is going to be. So you have to look at that as well. Or you're looking at the planned urban developments, which have amenities such as pools, possibly golf, those type of things. So you want to see what those homeowner association dues are as well, because that's just one more thing that you will be paying either yearly or monthly to that homeowners association.
Very well said, Deb. Thank you. Thank you for adding that. Start down the path of ownership. It may be faster than you think. It can take as few as 20 minutes with a mortgage loan officer to determine whether or not purchasing a home may be right for you. This is the initial intake that each of us take as loan officers in getting to know the goal of the individual. We'll also get into what it means to complete an application to get you pre-qualified for a loan before you start looking for the home that you're looking to purchase. And this is just giving a realistic approach to how long it actually takes for us to determine that, if you qualify or not. Set yourself up for success. You want to meet with a loan officer, a person who's going to take step-by-step guidance through the pre-approval process, communication throughout. And I know Deb can attest to this, that the open line of communication is key. If you start a loan process and let's say you've planned a vacation, you want to let your loan officer know that. I recall working a loan a few months back and my borrower left the country for over a week, and there were documentation that was pertinent and time sensitive. And we had to wait until he returned and was able to complete that paperwork. But it's very important to just keep an open line of communication with your loan officer. The other thing is, when you look for a loan, it's the same as if you were to go to court. You don't go to court without an attorney. When you're looking to find and shop lenders, you want to work with your loan officer. And I'm not sure on call, and we didn't do a roll call, how many individuals online are actually customers of US Bank. And we'll talk more to the end of the benefit of that. There's definitely a benefit to that relationship. Let's look at some things to consider. Before you start your home search, here are a few things that you want to look at. Look at the location. Is that really important? Absolutely. I think Deb talked about that. What type of home are you buying? What area is it in? Do you have children? What are the schools like? Touring home sales. All of these things are important. For most of us, buying a house is the largest asset purchase that we'll make in a lifetime. And you want to ensure that, as Deb stated, you put some skin in it. That means do your research, get to a comfort level. Getting ready to buy, types of properties. Which ones are we looking at? New versus existing. Deb talked about being a builder or a person that could work with you if you're doing new construction. Is it a townhome or a condominium, a single or multifamily? Maybe you're looking to buy a duplex because you want that investment to be the rent on the other side of the home and you live to one side of it. All of these are things to consider. Getting ready to buy. I'm going to introduce Linda. She will speak to the realtor side, things that you might want to consider, talk to family and friends. Your realtor relationship is very important. I often tell first-time home buyers, if it's a realtor that is extremely busy, it's possible they're too busy for you. And that's my personal opinion. You want, as a first-time home buyer, you're new to the game. You want someone that's going to be patient, who will walk you through the process, and who will be available when you have questions. And so you want to ensure that you're doing a little research on that individual. I'll turn it over to you, Linda.
Okay, here we go. Good evening, guests, everyone here. Thank you so much for participating. And I'm looking forward to working with the first-time home buyer. And this is what I call my roadmap. I'm going to share with you step by step what it's going to take in buying a new home. And the first top goal is to pick out your real estate agent. And so you're on the right track of doing that tonight. And then make sure that you're pre-approved. And then after you pre-approved, then we can go shopping. I love shopping with first-time home buyers because they get excited and I get excited in looking at homes and picking out homes. And then once you select a home, we submit an offer. And then once your offer is accepted, then that's when the work really begins. Because then you will have to have your inspections done. And then you're working with the title company, submitting the information to the title company and doing negotiating. And then you're working with your lender, hopefully Marla, and getting through the loan process and then getting submitted to the underwriter. And then once we get the okay from the underwriter, it is a done deal. You set the date to close at the title company. And then after you close at the title company, I love taking pictures of my buyers. I hand off the keys to my buyers. And that is the most exciting, rewarding experience in the world, is seeing the joy on their faces when they're given the key to their home. And I go with them to their home and take pictures of them in front of their beautiful home. And it's just a joyous occasion when you purchase your first home. So I'm looking forward. This is our roadmap. You'll know step by step which turn to take in every stage and process of the home buying guide. This is our guide. So I'm looking forward to working with you. So here's my contact information. You can find me on Facebook, LinkedIn, Twitter, Instagram, and maybe one of these days on TikTok. Stay tuned.
I love it. We'll have to work on that, right? TikTok is good. Thank you for painting such a beautiful picture. And it truly is that great of an experience. The reality check is that I want to add is the home buying process is stressful. I'll be honest and transparent. It is stressful, but it is worth it, right? Deb talked about putting some skin in it. You have to be engaged. It's a conscious, deliberate effort to purchase a home, to put your mindset in that frame. And it's not easy. I won't say that, but it's worth it, right? I'm going to turn it over to Deb. She's going to take over on this slide.
A lot of times individuals think there's a myth out there, you have to have 20% down. There are a lot of programs available to you with less than 20% down. Of course, it's always great if you can put 20% down, then you don't have what's referred to as PMI or private mortgage insurance. And I'll go into that a little bit more on the next slide. But we do have programs available as little as 0.5% down on what Marla mentioned about the MHDC program in Missouri, if you're a first-time home buyer or you haven't had a home in the last 3 years. We also have several, something that Marla will go through that she specifically does here at US Bank. And you are able to get gifts from family members for loans under $750,000. So if you have that available to you, we may even want to look at doing that. Some of the other costs that are involved right now, other than just the down payment, would be your closing cost. And as you have chosen a lender, we are usually able to tell you approximately what those closing costs are going to look like, so that you are wanting to put maybe 5% down, and then depending on the home, your homeowner's insurance, those type of things, maybe you need to come up with another $5,000 on top of that for the closing cost. Now, in some cases, you can negotiate that those be paid by the seller. But again, keeping in mind, it is a seller's market right now. So you really do need to come in with your down payment, as well as knowing or believing you're also going to have to pay those the closing cost. So the next slide. Two things involved is a pre-qualification versus a pre-approval. A lot of people ask me, what is the difference? Pre-qualification is really just a hypothetical scenario where we haven't really verified your income and we haven't gathered your documents. A pre-approval, however, is a much stronger letter. It's saying that we did take a full application, we did verify your income, and we've gathered documents to disclose to underwriting. The nice thing about US Bank at this time is we have what's referred to as a portal. We will send you an invitation to apply. Takes maybe 5-10 minutes. I know that our screen said 20, probably take me 25. I'm not technically savvy, but we have some incredible things happening that just, it sends it out into the net and immediately verifies your income, your employment, and everything. And then we can just send it through an automatic underwriting system and get you pre-approved within minutes. Sometimes right after you hit the submit, it automatically pre-approves you and you have a true pre-approval in your hand. That gives you a lot more buying power. So what we want to always do is really push for pre-approvals.
Very well said. I feel like now is a good time to stop and open it up to questions. Is there anyone who's present that has any questions about anything that we've mentioned so far? Whether the question's small or large, don't hesitate to reach out. And welcome to those of you who have joined late. We're going through the home buying process, and we're just wanting this session to be engaging. Here's a scenario that I'd like. Go right ahead. You have a question?
I got a quick question. Yeah,
Thank
so you guys mentioned low down payments as low as 0.5%, correct?
Yes, yes, you could get as down as 0.5% plus your closing cost, and or if you had a seller willing to pay those closing costs.
Right. I've heard there's programs out there where you can actually get grants for closing costs, or maybe even down payment assistance. Is that something that you have to do outside of US Bank?
No,
or
no.
is that
Myself and Marla are both certified to be able to do that.
Mm-hmm.
Okay.
And let me share this, and I'll give a couple of scenarios, and this may help just put a reality check to it. I closed a loan on an American Dream, and I'll speak to that now, which is US Bank's in-house product. No other bank has an American Dream. It is our product we consider CRA, which is a Credit Reinvestment Act. US Bank has a product to assist low to moderate income, and moderate is pretty wide range. If you invest $1,000 of your own money, you can potentially receive, and I know Deb talked about seller concession. Let's say the seller is eager and they're offering to pay some of your closing costs. You can get a percentage of that. And with the American Dream, there's $5,500 that's given on the low, and it can go up to $10,000 based on the cost of a loan. Here's a reality. I closed a loan a couple of months back. A young gentleman purchased a home for $250,000 under the American Dream. He brought to the table a total of about $2,000, and he was able to close the loan. After that, I did a FHA loan, and the person received MHDC, which was a grant. And on MHDC, what you're actually given, it does have income guidelines, right? And it goes based on your household income. But MHDC allows 4% of the purchase or loan amount. 4% of that will be given in a silent grant that's forgivable. Am I using the correct term, Deb? You can
Yes,
correct me if
it's
I'm
considered a silent second for 10 years.
for
Mhm.
10 years.
Uh-huh.
And you're not paying it back as long as you don't sell the property or you stay in the property under a certain amount of time. And I thought that was 5 years, but it may be.
It's now 10 for the first 5 years. If you are to refinance or sell your home, you pay back the full amount. Then at 6 years, it's 80, and then it's pro rata per year until the tenant zero. So it goes to 80, 60, 40, 20, 0.
Okay. So the benefit there is you have the ability, and I hope this is answering the question for more than one person, that you can potentially, this person was in an FHA, the home was just under 200,000, and all they brought to the table outside of their earnest money was 900. And that's a reality. What I've given you here are real live customer scenarios on loans that I personally closed. And I'm sure, Deb, can you give a great success story on one or two loans? And I know you've had them in the years. If you could share that.
I've even had them where they actually ended up getting some money back at the table.
And what scenario with that?
You know, that's kind of, it's not normal necessarily, but they were required to give so much money of earnest up front that, and in earnest money, just to let everyone know, is that money that is put up front once your contract is accepted. That's why there's no such thing as zero money type loans. You have to have some money up front, earnest money, plus your inspections, those type of things. But in the end, they actually got about $1,000 back at closing from the earnest money that went towards their down payment.
Excellent. Any other question? That's a great question. Any other questions right now?
Yeah, I have a question.
Okay.
And you'd think I would know this because my mom is giving the talk.
Exactly.
Right. I'm a little hazy though. Can you go over like the term appraisal and you know what that means in the terms of like the home buying process?
So appraisal is the professional appraiser who goes out to determine the value of the property. So an appraisal is a report that's given by a professional appraiser. It's third party. US Bank does, we coordinate it, but we don't have direct contact with that individual. They're unbiased, and they go out and they determine the value of that property. And they use several factors in the determination. So that may be, when Linda talked about a negotiation piece, let's say you go out and you look at the home and it's 200,000 and I love this home. We're going to start, and right now you're seeing a chart where it talks about the typical home buying process. Through that process, we're going to order an appraisal. Once the appraisal comes back, let's say you sign the contract for 200,000, but that professional says, oh, this house is only worth 180,000. The bank's not going to lend more on the home than what it's worth, based on how your terms are set up. That may be a time or opportunity to go back to the drawing board with your realtor and renegotiate the terms, in other words. And your second part of that question, Zach, you were asking the complete process, and it's right here in this call, in this graph. So you look at initially getting pre-qualified, complete the online application. If you're looking with US Bank, Deb has a portal that it sends directly to her. I have a link that it sends directly to me. It can take less than 10 minutes if you're tech savvy. You
Right.
get your pre-approval. You gather your docs. We're going to ask you for bank statements. We'll ask you for your pay stubs. We'll look at W-2s. You may be in a situation where we need full docs or full returns. Then you start looking after you get pre-approved. Again, it's talking about paying upfront fees and gathering documents. That's validation. You may say, I'm looking to buy a $200,000 home, but you don't have enough in the bank to validate funds, and you don't know where those other sources are coming from. If you qualify for down payment assistance, you let us know up front. We'll factor that in. We'll tell you what's going to need to come out of your pocket. And all of that, those pieces together need to be validated in the process. Then we package the deal. Once the appraisal comes back, we submit it to underwriting. We wait for the final approval. There may be, when we talk about stress level, there may be some back and forth in that. And that's where your loan officer comes in, and they look to complete what needs to be completed, reach out and re-verify in your processor. And then Linda gave a very good, vivid picture of what it looked like and what it would feel like the day of closing, when you receive the key and you're handed the key and you take the picture and you leave the closing, the title company, and the home is yours. So I hope that was a real big overview, but Zach, you have firsthand knowledge in connecting with your mom, so I'm going to let her take over.
That was great.
You're
Thank you for
privileged.
Yep, you did well.
Thank you. Does anyone else right now have any other questions? That's what we're here for. It's all about educating and sharing knowledge. And I don't want to leave anyone with any questions that we're able to answer today, but feel free, if you have a need for Deb, we will be available. We'll set up one-to-one appointments with you. We're flexible. You see this evening, we're online. There are many times, I know Deb can attest, that we will change our schedule to meet you where you're at. We both have office space. If you need to meet in person and you're local, we're open to that, or virtual. I know someone has another question.
Let's put Danielle on the spot. Do you have a question, Danielle? Because this is all, I know it's all new to you, and you're excited about buying your first home. So what is the most pressing question that you have on mind, or a clarification?
I guess I still have quite a few student loans that I haven't paid off. I do pay my monthly, I do pay monthly, but how does that factor into getting approved for a loan?
Go ahead, Deb.
Well, it depends, Danielle, on what loan we put you in, based on how we calculate what those payments are. We will use what you're actually paying on those student loans. However, if you have deferred student loans, then we will calculate the payment. For example, if you have $60,000 in student loans, I'm going to say just total, it's either a 1% or a 0.5%, whichever loan we can put you in. So the 1% would go $600 a month against you on that scenario, or the 0.5% would be $300. So we're going to always put you into a loan that best meets your needs, but they do calculate into your debt to income ratio.
Okay, I understand. Thank you.
Yeah, and I'll just add to that, just to be clear, they calculate in regardless if they're deferred or not. I know
Correct.
I've worked with several borrowers and they'll come back and say, oh, but it's deferred. Yeah, it's deferred. You may not be paying, but as a loan officer in a bank and underwriting, we're required to factor that into the debt as if you were paying to show your ability to repay the amount of loan that you're attempting to. I think I had another question from, is it Moto?
I know Tony has a question about what our origination fee is for US Bank. We have a flat fee of $770. 395 of that is processing and the other portion is administration. However, as Marla had mentioned, if you have a checking and savings account with us, which we can always open at any time, you'll get 0.25% up to $1,000 towards your closing costs from us as a seller or as a lender's credit. So in essence, you could pay for the $770, but that's our origination cost.
And that's huge. I've used that in a number of situations where when a person was attempting to gather their cash to close and what was needed, that credit back was huge. And Deb, I know you're a bit advocate for a person not only having the account, but there are certain corporations that you would receive a company, large corporations, where you may be employed by a certain company and that may allow a discount. Isn't that correct, Deb?
That is correct. And that's a very good point. We have certain companies that will receive up to 0.5% up to as much as $3,600 towards their closing if they work for that company.
That's awesome.
It is. So,
and this is what I want to add to that. That's why it's so important when you're going through the process and you're trying to find out what's available to you. You want to speak with a professional, just like anything else. You wouldn't, I always say, you wouldn't go to court without an attorney. You want someone who's well-versed in that. You wouldn't want to buy a house without a loan officer or a mortgage banker who's well-versed in what product is available and best suits you for your need. Some of the first things that we'll do when we connect with you is to find out what's your objective, right? What's important to you? Is it important to make a lower payment? We may show that you can qualify for X dollar amount on the house, but you may in conversation tell us that you have extra things going on and you choose for your payment to stay in this range. We're going to educate you and keep you well informed, but ultimately it's your decision. You want that person who is going to take the time to walk you through that program. And I can attest to Deb, I've leaned on her on several occasions, and we can definitely be your advocate in that area. Any other questions before I move on? Ken is online. I know you've been silent. You may be multitasking. Ken, is there anything that you would like to add to what we're discussing at this time?
There.
Well, I
You have a question?
wasn't multi, but I think you laid it out really well. You guys are right. There are several different loan programs that fit almost anybody. This is what I always tell my clients. I am talking to them. It's that, you know what, we can put anybody into and have homeownership. It might not be right now. We might have to work a few things, maybe, you know, maybe a little bit of payment, maybe working on your credit, maybe several different things, but eventually.
Ken, can I stop you for a moment? Can I stop you for a moment? Your voice is coming through. I'm not getting every word. I don't know if there was anything you could do on your end for a better connection on your volume.
Oh, can you hear me?
Yeah,
I can hear you a little bit better now.
Yeah.
Can you? Well, this is about as close as I can get to it, I guess.
You're okay.
But no, basically, you ladies done a wonderful job in explaining how the process works and the opportunity to anybody, I guess, earlier, anybody we can get into a home. We can finance anybody. It might not be right now. It might have to have some things you have to work on. Maybe it's a credit, maybe it's a little bit of money, stuff like that. But I can guarantee you, we work together and everybody follows the instructions, you can eventually own a home. Anybody can.
Thank you. I'm going to reiterate what Kent is sharing. What he's basically stating is if you're determined and you have the desire to own a home, it's a matter of following the steps that we lay out and putting the work in it. Everyone comes from a different place, but it's up to us as mortgage loan originators to assess where you're at. And what we do is give you the instructions to get to where you want to be, and that's owning a home. So we'll assess it. We're going to come up and talk about credit. If there are credit issues or things there, we'll help direct you and then loop you back around. I know Moto had a question. Go ahead and ask your question now, please. Thank you.
Actually, think you were getting ready to talk about it. I was going to ask, what type of credit score do you have to have? What's the best credit score? And if it was me and my husband, are they looking at, do we have to have the same or?
Actually, what we do, and I'll let Deb also speak to this, we'll look to see if you're both looking to go on the loan and it makes sense to list you both and we can pre-qualify you with both individuals, we'll go that route. If we see that one of you has a higher score than the other and it makes sense and we could still approve you for the amount of house you're trying to buy, we could just go with listing one of you on the note, right? As far as these credit score, we have programs that can qualify a person as low as 640, and that will qualify you. I believe there's a 620, is that correct, on a conventional, Deb?
Yes, unfortunately, a 620 on a conventional really does require to have 20% down. But a VA loan, for example, we can go as low as 600. And I know that Marilyn is going to be talking about, ways then to work on credit if we need to go that direction as well. We can certainly help you and look at it and say, these are the things that we need to work on. It may be 90 days from now, it may be 6 months. But we're happy to do that as well.
Absolutely. Absolutely. We work with individuals all the time where we may have started the process, we assess it and we'll monitor it and we're excited for them to loop back around.
Yeah,
because
absolutely.
We've given them a plan and they follow through, they loop back around and then they have a green light. We're ready to go.
Yeah.
Kent again was stating, and this is what I heard him saying is and I can't say it enough, if you desire to be a homeowner, you can. If you have the desire to be a homeowner, you can. We have products for you. If you're not quite there, we'll give you a plan.
Yes.
To position yourself so that you can get pre-qualified or pre-approved.
Yeah.
And this slide here, it's talking, did that answer your question? I just wanted to be clear. You were asking the minimum credit score?
It did, yes.
Okay. And again,
I have one more question. I was away from the phone, in and out, but I was listening. So I heard someone say about one-on-one.
Absolutely. We'll schedule one-on-one time. And give me your last name. And is this Lucius?
Yes. Yes.
Okay. I'll meet with you one-on-one, you and your spouse. We could either meet in person or online. And absolutely, absolutely. That's what we're here for. The session today is primarily to take everyone through the home buying process, but we understand everyone's situation is different and it will require the one-to-one. And that's where Deb and I will set up appointments and we'll walk you through the process and assess your situation. And if we can approve you now, we'll give the approval. If there are certain things we need to work on, we're going to give the plan to that and we'll help you get there. Okay.
Marla,
So
Esther has a question. So do you want to do a few more slides before you answer her question, or do you want to?
No, I want to go ahead and answer her question. And Lucius, did I complete the question you and your spouse have?
Yes, you did.
Okay, okay. And the next person, I apologize, it is
Yeah, Esther. She said,
Esther.
can the mortgage be high because the down payment and closing costs were under $5,000? Not quite sure. You want to elaborate a little bit on that, Esther?
What I'm trying to say is if a person is paying a really low down payment and closing costs, can the monthly mortgage be high? Just like a car payment, if you're paying a low down payment, it's potential for the car payment be high.
I think what you're looking at, the mortgage is amortized and car loans are simple interest loans. They're two different types of loans. You can literally, everyone's situation is different. A lot has to do with the program you're in and also how much house you're buying, right? The amount of the house. And then in addition to that, you're saying a low down payment, but are you receiving grants? Have we given a lender credit? There are a lot of different factors. But if you're coming to us, know this, if you're saying my goal is to keep my payment within this range, we're going to educate you to be able to make that informed decision to decide, is this a monthly, even though we qualify you for a certain amount, you should know within your family and your household budget what you can afford. So we're going to lay it out to you, but it's up to you to make the well-informed decision on, does this work for me and my family? And Deb, you may want to add something to that. I don't know if
No, I think
yeah.
you're spot on.
Okay.
A lot of times individuals qualify for a lot more than what they're willing to pay monthly. So I kind of work backwards and say, what do you feel comfortable with? And then let's work with that.
Absolutely. And that's what we do. We work up several different scenarios and we present it to you. We talk about it, and then you ultimately decide how you want to go. Roles in a more, did that answer your question before I move on? My apologies.
Yes, thank you, Marla and Deb.
Thank you.
Thank you,
So
Linda.
And
here again,
I
we're
guess
talking about roles.
there was one more
And
thing Esther had asked. Is it
Oh.
cheaper to pay HOA yearly or monthly? Esther, it just really depends on what home. A lot of homes in the Kansas City market don't necessarily have HOAs, and if they do, they're very small amounts and they require them on a yearly basis. The HOA themselves dictate that. That's not a part of your actual payment that you pay us. It's something I just want you to keep in mind. But if you were to go and purchase a condominium downtown, they would require that on a monthly basis. So hopefully that helps you as well.
Yes, thank you.
Good questions. I'm appreciating all the feedback and the questions. Here, when you purchase a home, you have a team of individuals that are working in your behalf to ensure that the transition is smooth. You have your loan officer, your real estate. Linda talked a bit about an inspector. And that's a person who's going to look at the property, and that's for your behalf. The appraisal, home insurance agent, title company, and closing agents. All of these professionals are working in your behalf as a team. We help to determine your loan options. Here are some key factors Deb's going to speak to real quick.
I think that we've talked about a lot of this, you know, the first time buyer versus a repeat buyer, credit history, as we just talked about, debt to income ratios, yes, including those student loans. Loan to value means how much money are you going to be putting down? So a loan to value would mean if you brought 20% to the table, that'd be an 80% loan to value. We've talked a lot about the down payment and the different products available to you and the property types, as well as keeping in mind military service. If you're qualified for a VA loan, we certainly want to look at that as well. The VA loans will go up to 100%, and they do not have private mortgage insurance on them. So they're very good loans if you have a veteran background.
Thank you. Thank you for that. And Deb will speak again. I think we slid this slide in there. You've kind of talked about some of the different.
There are lots of different types of loans out there. You have your fixed rate mortgages, which is that rate is fixed for the life of the loan and or if you were to refinance it. Adjustable rate mortgages, that means that they're fixed for a certain period. So for example, a 10-1 adjustable would be fixed interest rate for the first 10 years. Then it would be adjustable after that. With interest rate hikes coming, that may be something we look at. Keeping in mind, however, if you're going to do an adjustable rate mortgage, you do have to have a minimum of 10% down. FHA homes, a lot of us have heard a lot about them. I just want you to keep in mind, it doesn't mean first-time home buyer program. There are other loans out there available to you that do not have a lifetime of private mortgage insurance. FHA has a lifetime. The other ones, the private mortgage insurance drops off after you have 20% equity in your home. So again, you need a loan officer that's not meeting their own needs, but meeting your needs and doing what's best for you as the customer. And then we just talked about the VA, the Veterans Administration, for active service members, veterans, and eligible surviving spouses with little or no payment options.
Great, thank you. Eric has a question. Go ahead, Eric.
Thanks. I just want to ask quickly about loan to value, because I wasn't sure about how this works. It kind of goes back to maybe, I think as Isaiah was asking a question about appraisals. So as a bank, is there a threshold that you will lend to? Like my understanding was something like an 80% loan to value. So are FHA loans getting approved by, so that, you know, the buyer's borrowing more money to buy our house than maybe what, I don't want to say what the house is worth, but more than that 80% threshold. So is that additional deficiency getting covered by grants and other down payment assistance? Because
no, not necessarily. That's where the private mortgage insurance comes in, where you pay private mortgage insurance on a monthly basis if you don't put 20% down. Private mortgage insurance insures the bank or the lender in the event of foreclosure that whatever the difference is that they sell the home for and how much is owed will be paid to them to make it whole. But we can go, I mean, we have 100% loan to value programs. We have FHAs at 96.5. Those aren't grants. Those are actual products where they will cover that. Adjustable rate mortgages, as I mentioned, you have to put 10% down if you choose to do that. And then the fixed rate mortgage conventional loans, we have as high as 97% loan to value. Again, all of these, depending on, you know, earnings, there are income restrictions to them. Going back to what the minimum scores are on those, you have to have a 680. So there's benefits of getting your credit to 680 or above, not only in interest rate, but also in other ways as well. And that's something that Marilyn will talk towards.
Okay,
It will.
so you can get up to 100% of the value of the home.
Not the value, you're going to get up to 100% of the sales price or value, whichever is less.
Okay,
So
if
you're
is
going
the value
to
the
purchase,
appraisal?
do
Like
what,
if the
I'm
house
sorry?
appraises it, if the house appraises at $100,000, you would loan $100,000?
No, if you're purchasing the home for 80 and it appraises for 90, we're going to lend on the 80.
Gotcha. Okay.
Now
Another
on
quick question.
refinances, that's different, you know.
Okay. Okay. Another quick question, just since it came up, the adjustable rate mortgage thing. I've been really curious about this for a long time, especially with housing prices going higher and higher like they are now. Is a home buyer safe if they get a loan that's a fixed rate and let's say the housing market crashes again, that mortgage payment stays the same no matter what the value of the house is? There's no risk to the home buyer like there is with an adjustable rate mortgage?
Correct, on the fixed rate mortgage. That's where we get into the only thing that changes on a fixed rate mortgage are your taxes and insurance.
Okay.
So as insurance, if your insurance goes up, your payments go up. If your taxes go up, and I shouldn't even say if, we all know they do, then your payments go up. But the principal and interest portion of that mortgage remains the same on a fixed rate mortgage.
Okay, so $500,000 house drops to $250,000, you're making the same payment no matter what. You're not
Well,
going to lose the
no,
house.
you could refinance at that point.
You wouldn't want to because you'd be underwater, right?
Oh, no, I mean, if it's a $500,000 house and you only owe 250 on it, is that what you're
No, and it
asking?
drops. The value of the house drops.
Oh,
to
yeah,
250.
no, that's.
You owe
yeah.
500,000.
Let's hope that doesn't.
Right, but
Let's
I'm
hope
just
that
saying
doesn't
you,
occur, right?
you won't
right.
lose your house. You just have
No,
to wait
you
it
will
out.
not lose your house.
Okay, but with an adjustable rate mortgage, it is possible that you would lose your house because the
Well, not necessarily. If you were to look at a 10-1 adjustable rate, I will say to you that I only offer adjustable rates to individuals who have a safety net.
yeah, I kind of understand they're just short-term
Yeah,
instruments
they're-
anyway.
I mean, a 10-1 adjustable is going to be fixed rate for 10 years. And the average loan only lasts for 72 months. People buy, I mean, people resell, they upgrade, or they refinance. So
Right.
a 10-1 isn't necessarily a bad thing. However, I don't just throw people on those. You really have to have a safety net. I have to feel comfortable about you doing it.
Right,
Yeah.
right.
And it's all about staying educated and well-informed. We're going to move now to
Thank you so much.
get the scoop. Marilyn, are you ready
Yes.
to talk about credit? I know this has come up.
Absolutely. So,
This has
well,
been so
if you,
engaging. Yes,
yes, great
take it
question.
away.
Yeah, great questions, you guys. Well, I'm excited to go over credit with you guys because credit is very important. Sometimes it can be intimidating, but I'm here to tell you, do not be intimidated. We will meet you where you are and we'll help you face it and overcome any myths, challenges that you may have. And so I'm just going to go ahead and jump right in. And so your FICO score is made up of 5 categories. And so those 5 categories is number 1 is payment history. 35% of your score is weighted on your payment history. So it's very important that you're making your payments on time. And so if you forget sometimes about your due date, you know, maybe the best way to set it up is through bill pay, through your financial institution, or just set it up to where it's just automated and to where it's being paid on time. The second category is available credit, which is 30%. 30% of your credit is actually weighed on available credit. Now, I want you guys to hold on to that because I'm gonna come back to that because believe it or not, that is actually the most important category, the most important category. So the third category is length of history, which 15% of your score is weighted on length of history. So basically, how long have you had that credit card, or how long have you had that that auto loan? What is your history? And then the fourth category is type of credit, which 10% is weighed on type of credit. So do you have an installment loan? Your installment loans are considered as your mortgages, your auto loans, student loans. They're considered installment loans, just as well as a personal loan. Even if it's a small dollar loan of as low as $300, that is a personal loan and it is considered an installment loan. Also, revolving. Do you have a revolving account? Revolving account is your credit cards. And so 10% of your score is made up of type of credit. Do you have a balanced credit? Installment, revolving. And then that fifth category is number of inquiries on your credit report. So 10% of your credit is weighed on number of inquiries. So I always tell people to make sure that when you allow somebody to pull your credit, make sure that you're doing it for a purpose, on purpose. Don't just allow just anybody to pull your credit. When credit card applications come through the mail, just don't be filling out every application and submitting them, because those are considered inquiries. And really, rule of thumb, you really shouldn't have no more than about 3 to 5 on your credit report at a time. Credit inquiries do stay on your credit report for 2 years, then they drop off. So usually lenders can tell a story, you know, by looking at your number of inquiries. And so a lot of times they probably will be asking you questions like what was going on around that period. So you remember when I told you to hold on to the available credit, that 30% is weighed around your available credit. So that is actually tied to your credit cards. Your credit cards, your credit limits, and the amount of credit that is being used against those limits. And so you might hear people say credit card ratio or revolving usage. And so let me just kind of break that down for you. So a lot of times people can have a pretty good credit score, and they might say that they're not really seeing their credit score, you know, they might not see any movement on their credit score, but they're making their payments on time and all that. But if they have credit cards that they have balances on them from month to month that is more than 30% revolving usage, then you're not going to see your credit score increase, no matter if you're making your payments on time. A lot of times you may very well see your credit score decrease because you're using more than 30% of your credit that is available to you. And so just to give you an example, if you have a $500 credit card, then rule of thumb is, first of all, rule of thumb is don't use no more than what you can afford to pay off in that month, right? And so, but life happens. And so if you do have to carry over a balance into the next month, if you have a $500 credit card, then you don't want to carry over no more than $125 over into that next month. You don't want to balance greater than that going over into the next month. Now, that's if you just have one credit card. Now, let's say you have, let's just say you have about 4 credit cards, and the total credit limit between all 4 of those credit cards is $5,000. And let's just say that against that $5,000, you're using $1,500. Well, if you take $1,500 and divide that by $5,000, you get 30%. That's where you want to be or less. Of course, you want to be at 0, right? At the end of the month, you want to actually have all of your credit cards paid off. But once again, life happens. You don't want to carry over a balance greater than $1,500 into that next month collectively between all of your credit cards. So once again, if your credit card usage or your revolving usage, or maybe you might hear credit card ratio, if it's greater than 30% at any given time, you can potentially see your credit score decrease. And so a lot of times it's that second category, the available credit, that is the make or break. And so one other thing that I want to actually share with you guys is, well, I'll kind of touch on the bankruptcy. Bankruptcies, charge-offs, collections, judgments, repossessions. A lot of times they stay on your credit report for 3 to 5 years. I know repossessions, I believe it's 7 years. And so really, I know I've talked to a couple of people who have considered bankruptcy because they have a lot of debt. And a lot of times when people say they have a lot of debt, it's really not a lot of debt. So I really encourage you to speak to a financial advisor or coach before you decide to, make those moves. Because there's always programs, there are things that we can do to help you not go that route. Let's see. Okay, I already talked on too many new.
Marilyn, can I ask a question? Can you touch base, and this may be just in conversation, a person's situation where they have a couple of collection items and they don't have any credit cards and they're trying to establish credit, but the only thing on the report are collections. What would you advise?
Absolutely. So what I would advise is that when it comes to your credit report, you should be able to show more good than you do bad, right? And so I would advise to start off with a secured credit card where you're actually taking your money and you're putting it on a secured credit card. And so that money would go onto that card and you would use it just as if a creditor would give you a credit card, which they would call an unsecured card. So just like I was talking to you guys about that 30%, it still would pertain to your secured credit card. You would use it the same way. the same way. And then I also would encourage you to go to your financial institution and take out a small dollar loan, as little as $200 or $300, and then show that you're actually paying that back every payday. And so that might look like that you might set it up on a 2-month term or a 3-month term to get it paid off. And you just continue to make those payments and pay it off. Because what's happening is that it will report to the credit bureau that you're making your payments on time. And then is also gathering that history. And if you don't have no credit, I would tell you to do that 2 or 3 times. So once you actually pay that off, then you just take it out again and you pay it back. Take it out again and pay it back. Because your credit score doesn't increase overnight, no matter where you heard that from, but it doesn't increase overnight. It takes at least a good 6 to 9 months before you really start seeing a big change. But with credit, you definitely want to just be intentional. You have to be willing to sacrifice a little bit, but more importantly, committed to seeing that credit score increase. And collections. So I wanted to also talk about collections too. So a lot of times you might have collections that might be on your credit report and may have been on your credit report for a very long time. And so sometimes you do not have to pay the full amount of that collections. You can call that collector or that creditor and see if they will settle with you. And a lot of times settling for a lesser amount is going to be much better than not paying it off at all. And so I'm a big advocate on facing those collection challenges, facing that debt that you just kind of let just sit there because you were afraid basically of facing it. But I'm all about, hey, one step at a time, one collection at a time, and coming up with a plan to be able to pay that off. I've worked with a couple of people to where they were actually able to settle 60% lesser. They were actually able to shave off 60% of that debt and only pay 40% of it. And so one of the main things is making sure that you're not afraid to ask. They can only say yes or no. And a lot of times, if it's been on your credit report for a very long time, they just want something. They just want something from you. But most importantly, you want to make sure that when you do make that agreement with them, that they send you a paid and satisfied letter after you make that pay arrangement or that pay agreement. And then I wanted to say one more thing, Marla, before I turn it over to you. A lot of times people don't know that when you are a renter, that you actually have an option to be able to report your rent to the credit bureau. And a long time ago, that was not an option. And so nowadays it is an option, and it can very well help your credit, especially when you're trying to get a mortgage, because a lot of times lenders, and Deborah can talk more about that, but a lot of times they're looking for comparable credit. And sometimes your rent is probably around the same price or the same monthly payment as your the mortgage. And so just wanted to give you a couple of resources. So services you can use if your landlord uses it is Clear Now and Pay Your Rent. So Clear Now and Pay Your Rent. Both of those will allow you to report your rent to the credit bureau. Now, if you have services that you can use independently, meaning that you may have to pay a small fee in order to be able to report it, to have your rent reported to the credit bureau. But sometimes that's a small price to pay, in order to be able to see your credit score go up, especially if you don't have any credit. It's a great place to start. But just a couple of services that allows you to do that is Rent Reporters, Rental Karma, and Karma is spelled KHARMA, Level Credit, Rock the Score, Credit My Rent, Payment Report, and then there's one that's called Pinata. And Pinata is actually a free service but they only report to one credit bureau. And so make sure that you do your research before you go with any one of them, because a lot of them won't report to all three, but it may report to one or two. So it's really important that you would speak to Marla or Deb in regards to what credit bureaus they're going to pull. That's all I have.
Excellent.
That was a mouthful. Marilyn, kudos. I gained so much knowledge. A lot of those resources I wasn't familiar with. And just so everyone on the call knows, we will email all of the participants some of the resources that were shared today. So if you didn't get a chance to jot it down, you will receive that information, and we'll work with you, Marilyn. I know we'll compile the list of the places that you gave. Great information. And I do want to put a plug in and just state, if anyone is wanting to connect with you, Marilyn, and they want to receive that one-to-one counseling, that is your profession as far as credit wealth and building wealth and credit restoration, do they know how to reach you, contact you?
Yes,
You place that in the chat. Can you
I will
replace
put
it?
that in the chat. Absolutely.
Thank you.
You're welcome.
Get the scoop. We got more than the scoop, right? And I know we've passed the hour, so we're going to try to move to wrap things up quickly. Keep the process moving. We talked about this, keeping the open line of communication, be prepared, talk to the loans officer, avoid applying for new credit during the process. I had a person who bought a Harley after they started the mortgage process. It almost killed the deal. We saved it, but that's a no-no. If you're going to start the process to buy a house, be intentional, stay on that path. If you want a Harley, wait until you close your loan and then purchase it. Why U.S. Bank? There are many, many reasons. Deb and I have a passion to help individuals. We are available and here to work with you. And if you're not banking with U.S. Bank, I'll just say it, I'm not a banker. I'm a mortgage loan officer, but there are benefits. There are absolutely benefits in banking with us and also choosing to have your mortgage here. Many, many big advantages. These are highlights, the American Dream product. I kind of went over them earlier. If anyone is interested, I'll put that information in an email and start your home buying journey. We would love to work with you to start the process. If you're interested, please reach out to us. I've listed our contact information. Again, I'm Marla Dickenson, and there's my email address. We have Deb Hannon, who's a senior loan originator, and there is her contact information. Marilyn Chappell. And Marilyn, is this the email that you'd like individuals to use?
Yes.
Okay. And then we have Linda Wilson, who's the realtor. I want to who answered questions, who presented. Deb, you did an awesome job, and I knew you would. Great partnership. I enjoyed presenting with you in this session.
Yes,
Linda Wilson from Keller Williams, you're awesome, and we appreciate you presenting and sharing with us what the realtor experience is. Marilyn, you rock the boat in shaking up those conversations that aren't easy to talk about. And you're right, it's so many times it's fear. I speak to people, and I know Deb can attest, they'll say, oh, I'm not ready, but they won't say why they're not ready. Okay, and I say, be intentional. That's all we're talking about. It's a conscious, deliberate effort to change your situation. And Kent stated it, I know it came through shaky, but what he simply stated, if you have the desire to be a homeowner, you can. It's up to you. And here's a slogan. I'm great about slogans. It's up to you in 2022, right? Literally, it's up to you in 2022. And I'll leave you all with that. I will stay on the line in the panelists just a few minutes. If anyone wants to schedule an appointment, please place it in the chat or email us directly. And I appreciate your attention and thank you all.
Thank you.
Thank you guys.
Good job, ladies.
Remember, it's up to you in 2022.